and welcome to another edition of BCR Webcasting. Today, I'm very happy to be joined by Paul Coles. Paul is Director-Treasury at Orbian and is also board member and chair of Market Practice, the Market Practice Committee at ITFA. Paul, welcome.
Hi, Michael.
Paul, you're going to be speaking at a Trade and Investment Forum next week, which is going to be at the offices of HSBC in Canary Wharf. And your session is, in fact, a case study on how originators are innovatively selling at scale, um, and particularly banks and portfolio sales by HSBC to insurance. Is that right?
So that's going to be, there are actually two halves to the case study.
Right.
That's going to be one half, which my former colleague from HSBC will be covering some detail.
Okay.
And then my portion will be done with Patrick Bayliss from Allianz Global Investors. And we're looking at the other, I guess, flow solution that can be used and giving a good example of how we've put that in place.
Right. Okay. So the important question I think here for you is just give us a brief summary of how um, originators are using technology now to sell receivables and payables
Mm.
at scale.
The twist to everything, I think, is technology definitely has to underpin the flow, especially when you're looking at open account origination and trade finance. It's there are thousands of invoices that are being processed every day, and the technology is essential to be able to manage all of those. Uh, when it then comes to how we use that to scale things up, so that enables us to scale the flow into a platform. And for example, Orbian, we're say very much underpinned by technology as a supply chain finance platform. We rely on the connectivity with the buyer and suppliers to automate the flow of these files containing all the invoices. And from that, we know what needs to be financed, and then we can reach out to the funders who will finance the programs. However, there is an interesting view that the scalability on the sales side, i.e. the distribution to these funders, can be driven by technology, and it can equally be very simple. So in some cases, we've had a number of funders coming to us, and they're looking to automate the flow. And they really want straight through processing. So they want to receive the file in certain format. They've mapped the fields in that file to their back office processing system, and therefore they can extract the information very quickly and easily, pretty much without any intervention from any of the trade finance team.
Would that be all for one debtor, or could that be multiple debtors at the same time?
Typically per program, in the case of Orbian at least, we very much run payables focused programs, and therefore it's always a single obligor in our case. But then I'm sure the same applies to the companies that do receivables finance, where you have multiple debtors. Again, the important thing is all the hard work is done upfront in agreeing the what the program looks like, which parameters are acceptable to the funder, and after that, it's a matter of making sure that the flow that's given to a given funder stays within those parameters. And if it does, everything is automated and flows straight through. And yeah, I mean, the traditional approaches nowadays would be either through an SFTP file sharing arrangement or through APIs, which is increasingly the way that the market will be going.
So the funder has control over the parameters, or the funder provides the parameters to you, and you make the adjustments in the system.
The funder would provide the parameters up front, depending on what their credit approval uh, is specific to that program. So they would say, okay, we can go up to certain tenor, This is the pricing that obviously applies. If there are any exclusions in terms of certain flows or certain countries, then all of that is established at the outset, and the flow will then be based on those parameters. But the again, the alternative to that is, once the scalability has been created in how to handle all these invoices, whilst we can do the distribution using an STP, straight through process, for the funder, not all funders are ready to do that yet. So I think there's still a niche for where people like it being kept very simple. And sometimes I know in this day and age, everyone would like to say that spreadsheets aren't the underpinning of many banking activities, but the reality is sometimes a spreadsheet attached to an email is still a very simple and easy way for funders to be able to gain access to a transaction. And again, as long as all the parameters align, it can be quite a straightforward way for them to fund a program. The key is how to handle everything and automate as much of the bulk of the flow as possible. And that's really what's then opening up who can fund and how they fund, and having that, I guess, the flexibility to adapt to what a funder needs is what's enabling more funders to fund these trade finance programs, and specifically open account, which involves thousands of invoices.
And how do you see this panning out or opening up? Do you see the potential for mainstream use in terms of huge increases in terms of volumes of receivables and payables being funded in this way?
It's the market as a whole is still adjusting to the interest rate environment and the macroeconomics going on. That's trade finance is very impacted by macroeconomic effects. It's all about imports and exports. We know there's significant disruption happening at the moment, but generally the higher interest rates have also slowed things down a little bit, and we've seen volumes dip in terms of the outstandings. Maybe not the actual flow or the demand for funding, but the tenor of the funding, where it's within the control of, for example, a supplier. They might be waiting a little bit longer before they discount. So there are some factors that have impacted the overall flow of business. But I think in terms of the demand for trade finance and tapping into these open account flows, that's definitely been growing, and is one of the themes that's being explored at length in TIFF next week. And trying to find the right blend of funding for these programs is key, and that's where bringing in other funders, i.e. non-banks. So historically, it's always been the banks that funded these programs. They've been driven by relationships with the corporates. They will therefore come into these programs as part of a blended relationship view. I think here, the combination of making it easily accessible from a technology and operational level, and adding the fact that it's an attractive asset class to non-banks as well, who can maybe be a little bit more opportunistic in how they look at the risks that they're taking, because they don't need all the other relationship angles, and they will assess a transaction and a debtor on its independent merits and see how it fits into their overall portfolio and their requirements. That's adding a lot of interest and liquidity into the open account space. And especially, I think, the extra niche which helps grow this business is when you're looking at the risks which are maybe not as bankable. And by that, I mean, there's the banks will often focus on the top tier investment grade corporates. That's the traditional space for corporate banking activity. When we, for example, at Orbian are talking to buyers which are maybe a little bit smaller than that and on the cusp of being non-investment grade, and therefore they will maybe have less leverage over their suppliers. There are ways of structuring programs that will suit those buyers. It's important to then find a funder that may or may not be a bank that can also support that program. And I think that's where we see there's growth potential in the industry.
Yeah, I guess as the blue chip sector becomes more and more saturated, then there'll be more and more, should we say, looking at the mid cap sector, I guess.
Yes,
Um,
definitely.
have you any idea at the moment what the split is between bank and non-bank in terms, well, maybe in terms of using your platform?
Mm. Uh, Currently, I think we're probably around 10% non-bank. And the view is to continue developing that. The no, banks have very established relationships with the corporates. It's very important to continue nurturing those relationships, and often in the payables program in particular, the buyer will be directing to a degree which banks should be in the funding pool because they're part of a wider relationship. They have those drivers and relationship motivations for giving everyone some share of the business. But what we see is the importance of adding to that blend and bringing in other sources of funding which are complementary. And again, a non-bank will look for different things. It might be looking for those slightly higher yields and are happy to take slightly higher risk in the process. Maybe they want a blue chip name just to add to their portfolio and diversify the blend of risks that they're taking. So they might be okay with taking a lower margin as long as it's part of a bigger strategy. So again, it's really looking at how do we create that mixture for us, for the funders, and for the corporate. And to a degree, I would say when there's a platform involved, such as Orbian, we have that unique position to be able to try and take all these different considerations into account and find the ideal mixture of everything, which gives access to some good corporate flows for an alternative funder, such as an asset manager or a fund of some description. Equally, making sure we have enough banks in there to maintain the banking relationships is important. And ultimately, all this is underpinned by satisfying the buyer, our ultimate client, and making sure that their supply chain is able to withstand any shocks that might come about by having this mixture of funding available to them.
Well, Paul, I think the future of this seems very dynamic and evolutionary, I suppose. It seems like there's a lot happening and probably a lot to talk about. So we very much will look forward to getting into a bit more depth with you on the 4th of June next week. And just to remind everybody, that's at HSBC in Canary Wharf in London. Okay, Paul, thanks so much for your time today, and I look forward to seeing you next week.
Thank you, Michael. It's been a pleasure.
Thank you.